Bitcoin is showing signs of a potential downturn after breaking a key support zone between $75,000 and $76,000. Analyst Mikkel van de Poppe has flagged this as a critical development, suggesting the price could fall toward the $60,000 level. The move below this zone happened on Friday, and while Van de Poppe notes that Friday corrections often reverse into bullish momentum, the current market conditions may not support a quick rebound. The analyst also pointed to multiple Chicago Mercantile Exchange, CME, Bitcoin futures gaps above the current spot price, with the largest gap above $79,000. These gaps represent areas where price momentum could stall or reverse. Van de Poppe warned that unless Bitcoin can push back up to $76,600 or higher, the likelihood of a new bull market high diminishes. This means the market is at a pivotal point, where the next few price movements could determine the direction of the broader trend. The uncertainty surrounding. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Bitcoin's trajectory is further compounded by macroeconomic factors, including the appointment of Kevin Warsh as the new Federal Reserve Chairman and his potential influence on interest rate policies. Warsh's stance on monetary policy could impact investor sentiment and capital flow into crypto assets, adding another layer of volatility to Bitcoin's price action. Polymarket data shows a 51% probability of Bitcoin hitting $55,000 by 2026, with a 31% chance of falling to $45,000. These odds reflect market sentiment and the growing bearish outlook among traders and investors. However, on-chain data suggests that 71% of Bitcoin's circulating supply is held by long-term holders, which could act as a stabilizing force and make a break below $60,000 less likely. Despite the bearish signals, trader Matthew Hyland sees a different picture. He argues that Bitcoin's rally from the $60,000 low in February has lasted about 90 days, which is historically significant. Hyland notes that a bull market rally has never lasted 89 days in Bitcoin's history, suggesting that the current uptrend may have more room to run. He also highlights the breakout of high time frame resistance as a bullish sign. The market is now watching closely for the next signal. If Bitcoin can stabilize above $76,600 and show signs of a rebound, it could signal a shift in sentiment and a potential reversal of the current downtrend. Conversely, a continued decline towards $60,000 would confirm Van de Poppe's. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Forecast and could lead to further bearish momentum. The key question is whether Bitcoin can hold above $76,600 and regain bullish momentum. If it fails to do so, the market could face a prolonged correction. On the other hand, if the price stabilizes and begins to trend upward, it could indicate the start of a new bull cycle. Investors and traders are closely monitoring these developments, as the next few weeks could be decisive in determining Bitcoin's near-term direction.